Are you one of these people that has been in the market buying gold en masse? The gold bugs have been out in force.
No, not I, Brian. While we won't tell people not to buy gold if they're hell bent on it, but it just isn't our favorite asset class. We're more intent on finding babies that got thrown out with the bathwater whenever we go through one of these selling periods than chasing gold at this point.
All right, so what do we chase? I mean, with this market volatility lately, is there any place, and don't say bonds or cash in a shoebox under the mattress, that looks relatively safe and maybe relatively fairly or even undervalued?
Well, I tell you, the word safe really is something we can't say about anything that can fluctuate, whether it's gold or even safe in terms of putting the money under the mattress. That's not a safe thing to do, or putting it into negative yielding bonds around the world wouldn't be a good idea in our opinion, unless you're an aggressive trader expecting even lower negative rates. But from our perspective, we continue to like equities. We think technology, which has experienced a bit of selling over the last few days, it looks good. We think industrials, which are the new technology. When you think of the importance of industrial equipment and all the sensors and things that are applied to the Internet of Things with that. And we continue to like consumer discretionary with more people working, more people, wages creeping higher, and good consumer sentiment. And we like financials as contrarians. Nobody likes financials, right? But financials make the world go around, and we can't help but think that this is a world in which perhaps a flat yield curve does not mean big banks can't make money. I mean, if you look at it, a lot of them are making money because they don't pay a heck of a lot on deposits.
Well, that's the point. You're supposed to buy things, I'm told, John, that other people don't want. Buy low, sell high. Go back to consumer discretionary. If you are betting on the consumer, is that you and Oppenheimer saying we're not headed for recession anytime soon?
Yes, sir. We do not believe we are headed to a recession anytime soon. And, you know, yesterday on CNBC, I had a break. I was at the Oppenheimer annual technology conference in Boston, and we took a break, and I turned on CNBC, and I saw the head of Visa was on television being interviewed on CNBC, and they were talking about how good business was around the world. And so we like the consumer, and it may not always show up in every retail name, but across the consumer discretionary sector, we believe there's plenty of value.
Where would the S&P 500 or the Dow be if we didn't have this trade fight, John? If tariffs didn't exist and it was all huggy, kissy, kissy with China and everything was great, where would the market be?
Brian, you know, it's hard to say because there's so many factors around that. But if we just take that as the central consideration, and if everything else was equal, based on prior to March of 2018, we would have to think that probably the S&P would be up about 20 or 25% higher than it is.